All right. Good evening, everybody. Welcome to Slow Markets. This is a first time takeover for Hoop and myself. We are very excited and grateful to be here with you tonight. It's going to be a little bit different, but we're going to try to do our best to supplement the lack of Dakota for the evening. I know that you all obviously are going to miss him and love being with him, but hopefully you can get some value out of your time spent with us this evening. So, a couple of quick things, a little bit of housekeeping. We are going to go ahead and hit the Top Step risk disclosure. I put that in chat. I know I already put it at the beginning of the broadcast, but just in case you missed it or joining us now, as always, markets are risky. You don't know what you're doing, right, Hoop?
Amen.
So let's we got a little quick game plan, but before we get into things, I do want to bring up one of the major kind of breaking news this afternoon was that the House officially passed Trump's big beautiful bill. So the House Representatives have sent the big beautiful bill now to the president for his signature on Thursday. After a very emotional debate, of course, and the final vote was 218 to 214, with just two Republicans voting no in the end. So overall, obviously, that's going to hit his desk in the coming hours, and I'm sure we're going to continue to more as that develops. But it is at least out of the House's hands and now at the desk, and we'll see what kind of things get shaken up next week. Other than that, Hoop, I don't really have any major news or anything, crazy to go over. So I'd say let's just go ahead and dive into charts. The game plan for tonight, you guys, is we're going to go ahead and just do some major markets. So I know Dakota is a technical trader. I am also a technical trader. And I think Hoop, he has obviously a lot more time in the markets than I do. So I'm sure he's going to have plenty of experience and insight and just his perspective to share. We're going to go ahead and knock out some of the equities first. So I'm going to switch over to the S&Ps. And now the SPOOs are probably going to look fairly similar to the NASDAQ in some regards, more so to kind of the overall flow of the market if we're looking at some of the higher time frames. So I usually like to start out on the daily. Obviously, we did break above previous all-time highs this past, let's say day, really. We got close yesterday, and then with today's trading, we finally broke above 62.87, and we are currently trading around 63.13. So at the moment, we are trading above the prior all-time high, and we're kind of in no man's land, right? We're in some territory where there's really no sellers above us. There's no predetermined kind of prior levels that we can rely on to understand or to potentially have an edge over where sellers are going to come in. So for right now, there's really, for me, there would be no overhead supply. There's really nothing that I can map out on the chart for key levels. In terms of kind of major demand levels, what I'm really looking for is, this is pretty, unlikely that we're going to see this anytime soon. But if we were to see some sort of a shakedown in the market to a pretty significant, standard, my next kind of major daily level would be the 60.25s to 59. So this drop-based rally that results in a nice kind of consecutive motion for multiple days. As Jack said earlier, in fast markets, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 green bars in a row, not including today. So we are in a bull market. I don't think there's any real way to deny that we are in a bull market.
Zombie mode.
Zombie mode indeed.
Yep. Mm-hmm.
If we kind of go down to, so aside from higher time frame, which once again, there's really no supply above for me to reference. If we go down to something like a 1 hour time frame or just some general structure, what I'm really looking for, I'm a pretty simplistic trader. So when I'm looking for structure, I'm looking for really one of two patterns. And it's most commonly referred to as an uptrend or a downtrend. And those trends are obviously going to produce, the cyclical nature of the market. You, of course, in an uptrend are getting higher highs and higher lows. And then a downtrend, you're getting lower highs and lower lows. So on a 1 hour, what I'm really looking for primarily when I'm looking at the markets or looking to find structure is I'm really trying to pinpoint the recent breakout segment. So from the recent high, swing high, to the prior swing low, that's what I would be, that's the area of focus that my eyes are really typically gravitating to find any sort of intraday levels to participate in with that general direction. What I would usually refer to that prior low would be the control swing low. So essentially, if price were to break below that, that uptrend is at least no longer valid. And at that point, we've broken that structure. So I usually am trying to anticipate, some form of a correction within that cyclical nature, and then I'm looking for a continuation off of some sort of imbalance or retest to a level of some kind. For some people, that might be,
Gabe,
let's say,
your
or
chart.
yeah,
Sorry,
what up?
man. Doesn't look. I'm
Oh,
looking for it. Sorry, man. I'm
you're
looking around. I'm
good.
like, maybe it's me.
You're good.
Oh, I got
No,
it.
no, it's me. No, it's me. I'm over here producing in the background too at the same time. That's funny.
Yeah,
First time, got to work out the growing pains
that's right.
of
They're
doing
like,
slow
"Where's the
markets for the
chart?"
first
I'm
time.
like,
Yeah,
"It's somewhere."
chat can uh, chat can definitely rip me a new
Chat's
one
always
for
there
that
for you,
one.
man.
That's hilarious. That's absolutely hilarious. All right, so let me just quickly high level overview kind of what I'm referring to, but really on the daily chart, as we said, we really just have a daily level of demand that I'm looking at 60.25 to 59.59. Consecutive, nice push higher, broke above the prior swing high with some nice momentum, and that's really the next area of higher time frame demand that I would be looking at. We're obviously nowhere near, that would be a pretty significant move down. We'd have to go 5% down to get back down there. So unlikely that we're going to see that anytime soon unless something drastic happens. In terms of structure, though, what I was really just kind of breaking down was generally speaking what kind of trader I am. I've told Hoop, and I think he can probably attest to. I don't have a lot of layers on my chart. I'm typically very simple. I like to look at just general key levels with some intraday structure on an intermediate time frame, like an hour. And I'm just trying to find some way to participate within that structure. So if I have, my higher high and my higher low, I usually map out that prior high to recent low here. That would be my quote unquote breakout segment. And I'm trying to find some way to participate or find a level to join that if we were to get some sort of retracement down and then a continuation of that trend higher. So right now, it's pretty dang clear that we really are in an uptrend. So what I would be looking at would be a kind of map out just the current swing high to the current swing low, which was this morning's early low around 5 a.m. is when we established that low, which is kind of 62.72 half. And somewhere along this line of information here on a smaller time frame, like let's say a 15-minute, there's going to be some form of demand that I could look at. And if I'm looking for an opportunity to be a buyer, preferably I like to buy down in at least 50% of that kind of range to more towards the lower kind of the lower half. Just because that would be technically considered a little bit more discounted versus buying so aggressively. Um, that sometimes means that I don't always get a fill because price may not get down to 50% of that prior segment's range if it's an aggressive trend. So sometimes it means that I miss out on trades if I'm more of a set and forget trader. Obviously, you guys know, especially with on air, we tend to scalp the market, which is usually on time frames much smaller than a 15-minute time frame. But just generally speaking, kind of one level that I'm looking at on the ES would be this area between 62.90 and 62.82. This nice little rally-based rally, lots of momentum came out of that kind of consolidation. That's kind of the drive that took us to new highs today. So if we were to get some form of a retest down to that level, I would be interested in looking for longs. Once again, we may not get down there. Obviously, we're a good 22 handles away from that that realistically coming into play. But anything below that prior low, so that 62.72, that would be an invalidation of trend for me. So as long as we maintain above 62.72, I would look for some anticipation of a correction of some kind into some form of imbalance. To some, it might be a level of support. And from there, I'd be looking for a continuation of that trend. Hoop, on the ES, what are you looking at?
Um, a couple different things, and once again, I wasn't a technical trader the first portion of my career, and as the years have gone along, I've had to become more and more of a technical trader because there's no pits, and a lot of those things have changed. So this zombie rally mode that we're in, I had a trend line drawn up there, that blue line you see there, and that was kind of sitting up there a while ago. Once and that's on a daily, we broke through that 6,200, and basically since we've gone through there, been straight up.
Right.
I think the only thing I got trapped in a little bit, and once again, I know better on a day before a holiday would be, I thought with a little bit with the number coming out that we might see a little more of a pump and dump um, myself. But because it's this holiday and what we're dealing with, for us to go in zombie mode, the bill gets passed, and it sounded like that was kind of leaking out early that that was going to happen.
Yeah.
Um, we just kind of got in that grinder mode, and once we took out 6,300, took out the all-time highs, we just kind of just have kept going in that mode. The only thing where I smell, and this is once again, when we talk top-down approach, I know we're day traders, but I get a little hesitant at the bottom there. This volume stinks on this rally. And you can go back and you can look at Liberation Day and obviously down moves. You're always going to get, you're going to get more volume. But if you look at any of these big moves, there's some volume behind them. Even if you go back, this is going back to the carry trade last summer after being in zombie mode again. And, volume was really poor back then. And then when we rolled over, Katie barred the door. So, the trend is your friend, and I'm sticking with that. But I smell a trap, and
Okay.
I don't know what the catalyst will be. Could it be July 9th? Could it be, there's always in 35 years around the market, we can always look back and sit there and say, okay, what's the thing that turned the market? When you've heard Hoag say it, when everything looks the greatest, that's where you look a little suspect. Equities are definitely a little bit different.
Right.
But I just think, we're in that mode. I think the only thing that can really keep us out of buy the dip mode right now would be some fundamental or something would have to, because this market is super resilient. And the only way, Gabe, you can start to look at these now, like you said, when you run out of, any price action, you got to start doing measured moves. And measured moves, and you can grab a bar and measure this and measure that and see where it goes, but you're still, it's still, there's no structure. And I know you like to have some structure, and I get that, but that's the only thing that I'm just a little bit of suspect of what's going on, and we're seeing a little bit of a pullback here tonight. Maybe that's a retail thing. I like 6,300. To, if I'm going to take a shot at buying this market, I would say,
You too.
I would probably look at that tomorrow. That would be my first number.
Yeah, I'm with you. 6,300 looks like a good number. It's actually literally 6,303 is the 50% mark of the extremes of that recent swing. So I definitely agree with you there. I think that overall, I find myself in these markets, especially when we start drifting and doing this kind of zombie rally. We're at all-time highs. There's no reference points for me above us. I find myself trying to always call or pick tops, right? Just trying to be that person that snags a short. It's just a mean short, everybody's looking for a free fall. And I get myself really kind of bent out of shape doing that. But I'm really trying to switch gears and just knowing, okay, the probabilities are more on my side to be long. The question is, how aggressive or how conservative do I want to be in terms of the location that I try to get in on those longs? And that's where I'm really kind of leaning more on structure to the best of my abilities. Sometimes I throw structure out the window, and that's not a good habit to get into. But yeah, that's 6,300, man. If I'm leaning on that prior leg, and by the way, R-Bear asked in chat kind of what that 50% line, how I got that on the rectangle. It's just simply a rectangle tool. And then what I did is I just went into the style settings, and in the style tab, there's just a midline that you can enable, which I like. So that's kind of a nice, easy way to get 50% without having to use the Fibonacci tool and mess with all the additional kind of fib lines and settings. I think that's a really simple way to do that. But that's really what I like too, Hoop, is there's a little hesitation that took place at that 6,305 to 6,299, which kind of overlaps with that 50% mark, which for me would be like a little area of demand, right? So we had a nice push higher. We stopped, right? We just paused. We fought. We had a little back and forth. That's why you see that kind of wick over wick across those 2 5-minute candles. So some sellers attempted to come in just above those 6,300s, and then buyers ripped them, ripped their faces off and just continued higher. So that would be a pretty decent imbalance in my eyes and what I'm leaning on. And I like that it would give the market that opportunity to correct. So I'm not getting too aggressive. Like I'm not trying to get stopped out in some of this more aggressive demand that's much higher in that swing in price. Like even the one that we're bouncing off of right now, like you see, there's a lot of little areas of consolidation with fresh breaks. It's just that a lot of them towards the top or towards the extreme highs of that swing are just getting ran through, especially towards the end of today. We obviously, trap some buyers going into the lunch hour, and then throughout the rest of the afternoon, we kind of continue to sell off on the, earlier today. So
do you trade ES much?
Dude, I'm trying to get a little bit more with it. I think
Diversify?
diversify a little bit more. Like you saw me trade oil one day, right? Like I'm not trying to get really wrapped up in just NASDAQ because it is like crack. And I think that's why people gravitated to
100%.
towards NASDAQ is because of just how enticing it is. It's not that ES can't produce quality reward to risk. It's just that the moves seem less intense.
Yeah.
And I think that intensity, right? That dopamine that people like and kind of get out of the market. I think NASDAQ fits that profile compared to ES. But anyway, so right now, you guys, that's pretty much it for the ES right now. These are kind of the 2 intraday levels I'm looking at. If I'm looking for longs, this is a little bit on the aggressive side just because I'm about, I'd say a 30% of the extreme high of that range. But this is a location that, I could keep stops below the 6309 region. I want to keep them tight, risk like, 3-4 handles and look for maybe the 321s, potentially that next little prior 5-minute high, kind of right before the reopen with that little gap. We kind of filled most of that gap pretty much right after we opened a little bit lower. But that would be kind of that next level, 6320s to 6323, that we could look for like a shorter term reward to risk. If you didn't want to have to carry that over and look for new all-time highs. I don't really expect, I don't know about you, Hoop, but I'm not really expecting new all-time highs tomorrow. It's obviously equity markets are closed. The driver, the main source of volume is banks are closed. Like it's most likely going to be just a chop day. So adapt, maybe look for a potential range play if you're comfortable with that. But I definitely wouldn't be looking for a full trend continuation, which is what I usually lean on. So I'm going to have to adapt to that type of environment tomorrow.
Put your range hat on tomorrow, man.
Yeah, exactly. Just channel my inner Dolby. Channel my inner Dolby. Guys, for those that are asking in chat, we are going to go through cattle. I'm going to have the legend himself go through cattle there a little bit later. So stay tuned for the cattle breakdown. Shout out to Danielle. I know she popped in the chat. I don't want to ignore chat here. Kind of catching up a little bit here. So futures. Yeah, Andrew, thank you. Shout out to Andrew. Man, it's been a minute since I've seen him. So I hope all is well, but he's just constantly in chat. We're so grateful for Andrew. What I really want to go through is the trading hours for tomorrow. So before we get too deep into the charts, we said yesterday that, or today I should say, because it's technically still Thursday, Gabe. We had a limited equity.
I don't feel like it, Gabe.
We had an early close today in the equities and futures. We obviously closed at noon Central. We reopened at 5 p.m. Central, just as we normally would outside of a holiday. And then the futures are actually going to trade through the overnight into 12 p.m. Central again tomorrow. So you can technically trade futures overnight. Of course, as Hoop had said before, Europe doesn't care about our holiday too much, or at least there's going to be some participation, but it's just going to be a lower quantity, especially coming from our side of the world. So just be prepared. It might be a different day, but overall, we do have some available trading tomorrow until 12 p.m. Central. Trading combines and express funded accounts will need to be flat by 11:45 a.m. and then live accounts will need to be flat by 11:30 a.m. Central. So just be conscious of that. And the equity markets are completely closed tomorrow, so there will not be a stock market open or trading at all tomorrow. But then the futures will once again reopen at 5 p.m. Central on Sunday. So it's going to be a little bit of an odd couple days to close out the week, but there's still some opportunity if you're somebody who's really just trying to get into the markets before the 4th or even on the 4th. All right. Let's see. Cloud, what happens if a live account is open? It just simply means that the risk team is just going to liquidate or close the position. So if you are, if you forget about a trade, we obviously encourage and ask our traders to be responsible for their own trades. But if you so happen to not be flat by the associated time, 11:30 a.m. Central for live or 11:45 for all simulated accounts, the risk team will end up just flattening. There's like an auto close that will just run on the platform. So just be conscious of that. There's no penalty. There's no, there's not like somebody's going to come after you for it. It just means you'll see your position get closed without you hitting a button, and that's it. The markets will go into a dormant state. You'll get a little notification in the bottom left of TopstepX, and you move on to your holiday weekend. That's essentially it. So no stress, but of course, just be conscious of the times. All right, so real quick, let's get into now. There's not really going to be a whole lot of difference, honestly, with NASDAQ, but let's go talk about it real quick. So we obviously had a pretty monster day in general. Now NASDAQ actually ended up piercing above to make new all-time highs a few days ago. On the 30th, we technically broke above highs in the futures market. I believe the previous all-time high was 22,869. On the 30th, we had broken above that. And then we had a couple days of consolidation, a little bit of a pullback, and then obviously today's trading took us to new highs. So same thing with ES. For me, as a supply and demand trader, there's no imbalances above us until sellers step in some major form. I don't really have a previous reference point to gauge the ceiling. I have no idea how high we could go. And if that's usually the case, my game plan, just like I said with the ES, is going to be to continue to keep a long bias until the intermediate time frames start to show a trend structure shift. And at that point, I might look to adapt. Here we go. We might hear some fireworks. If that comes in through my mic hoop, just let me know.
I'll let you know.
Yep. Firing them off. But in terms of the 1 hour time frame on NASDAQ, so before we switch to hoop screen, I'm going to map out the current swing that we just had today. So of course, 5 a.m. we printed a low of the kind of pre-market. We had some other consolidated lows earlier in the Asia session in the evening yesterday, just like maybe a point or two lower. But 22,830 is the kind of the swing low that I'd be looking at an invalidation of trend. So if that gets broken, then I'm no longer going to consider this as a bull trend, and I'm going to be looking at it as more of a sideways environment until we get enough information to say, if I start to see lower highs and then the lower lows with the break, then I might adapt. But at the moment, I'm looking for opportunities to engage with this. This is the location. Anything above the midway point would be aggressive. Anything below the midpoint would be more conservative and would give you a better price location. It would also give, just once again, that market the opportunity to kind of run its course of the cyclical nature that you see. But that is the swing. And then for 15-minute levels, same kind of key level in the 15-minute for the NASDAQ, but just different price, of course. 22,910s to 22,878s. That's kind of that little 30-minute consolidation before we had some nice momentum carry us to new highs and all-time highs. If we don't get back there, of course, then there might be some smaller time frame opportunities to present itself. Like if you go look at maybe a 5-minute time frame, NASDAQ does not have a whole lot of aggressive demand to potentially look at, but I do like kind of hovering right around that midpoint, which is that 50% mark that I know Coach Jay typically likes to look at too, but he uses this in a different regard. He's not looking at a structure of trend from high to low. And doing the 50%, he's typically mapping out the 50% of a high volume candle. So a little bit of a different kind of process for me, but that midline would be around that 22,960s, which would kind of correlate with this area of consolidation before this breakout. So we have a little bit of room to go. So at the moment tonight, I might look while we're on air together. Once we kind of get through some of the major charts, I'm going to probably look for a scalp potentially to the downside to see this kind of slow, gradual grind down continue. But Hoop, what are you thinking on the Nasdaq?
Um, your go-to in bread and butter when you're in trader mode is the 5 minute more often than not, or 1 minute.
Yeah,
What
one
typically
and
when you're in like during
one,
trading New York session, what's your go-to?
one. Yeah,
One. Okay.
one's usually the go to. 5 minute if I'm trying to drown out the noise. Five
hmm
minute would be kind of my next go to. If it's super noisy, but if it's still
hmm
fairly clean, then a 1 minute.
Okay. And once again, that's the difference of an ES trader versus a Nasdaq, right? I mean,
Right.
what 5 minutes, and you're looking at micro. What would you say, Gabe? If you look back at your stats, what do you think now you took you took a good one today, but more often than not, are you a 10 to 15 point move guy? Is that kind of your more often than not? Am I right?
Yeah, I would say with yeah, that's pretty close. I'm usually risking anywhere from 10 to 20 to and looking
Okay.
for about a 2 to 1 on average.
Are you 2 to 1?
Um,
Okay.
yeah, that's usually my goal, and that's conditional based on if it's available. Like if there's low hanging fruit, like a pretty relatively close by, intraday kind of 5 minute high that I could target if I was long, or a 5 minute
hmm
low, kind of low hanging fruit, right? Where would stops be in a shorter term? And that's usually what I'll target. So hopefully 2 to 1 would be kind of the idea, but sometimes it's a little bit less, like
Okay.
1.5.
Yeah. I think ultimately the way I look at Nasdaq, and I use moving averages because I that's how I kind of look at a market, maybe a trend rolling over. That's the 50-day, the purple one there.
Right.
Um, we start to lose that area. There's some space in here. So, when you have these big candles, and that's a 5 minute, if I'm looking at NASDAQ, you have these big spaces, long bars in here. So the NASDAQ's one of those ones when it starts to roll, there's like pockets, I call them. So, for me, like on a 5 minute, I'm looking, you know, 22, 9, 995, is kind of an area where, we found a little bit of action in through there.
Right.
Um, the biggest thing about NASDAQ that, trading it for me is just the wicks and the rejection and then rolling over is what I've, you know, because I kind of was a swing trader, and I'm looking at reversion to the mean. NASDAQ, just at times, if you get into a short lens, it gives you a lot of head fakes, man. And more screen time and looking at your setups, I think helps that. And NASDAQ is definitely, for me, gives a lot of head fakes. So I kind of lean on that moving average. Um, and then I'll just kind of see how we act through this pocket. So I would look, if I were going to take a short up and against here, once again, I'd look at that 95 area. And once again, NASDAQ, well, we've had a good move up for 8 days. So, you know, what do they say? Elevator up, escalator up, elevator down. So if we
Yeah.
get moving, so I agree with you. I don't think you're going to see that come tomorrow or tonight. You might
No.
grind
Yeah.
and start to rotate maybe towards those 60s. If it really got, you never know. London might kick in a little bit as the night goes along. As soon as Asia, kicks on, you do see volume pick up and the market starts to go. Once again, Europe doesn't give a crap whether
No, it
we're
does
selling,
not.
especially, yeah, they don't care. So
No, it does
yeah, but
not.
I would say I'm looking at that. I would only be looking at anywhere from 30 to 50 points as kind of a pullback right now. I don't think you're going to get more
Yeah.
than that.
Yeah, I'm with you there.
Mhm.
Awesome. Alrighty. Let's do. Let's jump over to crude. Let's look
Okay.
at
Ugh.
crude. Actually, we're getting a little bit of a. I was looking at a 1 minute chart there, and I looked for a second. And we got like a 7 tick move in a matter of the last minute, and I'm like, "Oh, look at that candle!" But volume is absolutely horrendous right now.
Yep.
Let me
Mhm.
switch over to my charts real quick. All right, so we're looking at crude now. Crude is quite unique. Now we've, from the extreme that we had, which was up at
Mm,
kind of mid 78s, we've had about an 18% pullback off the top there.
crazy.
Quite wild. Now we are
Mhm.
sitting in a little area, like we're kind of right back. If we were to look at the general kind of daily previous swings, we had to move from 58.31 all the way up to 78. And that happened in from May 29th until June 20th. So in about a month, a little less than a month, we had
Mhm.
pretty much a $20 move per barrel. Now we are below kind of that 50% kind of midline of that recent segment. And we are actually quite below, if we're looking at general kind of support, what should have been potential support failed pretty quickly when we had that huge sell off on the 23rd. So at the moment, I personally, I'm learning crude. So
Mhm.
technically, at the moment on the kind of higher time frame, what I'm really looking at is how we kind of handle this back and forth that took place on the 9th and 10th of June before this pop. So that I don't know what the volume was, and that's probably something I should incorporate. But on the 11th, we got that nice kind of daily pop from the 63s up to about 60, almost 67. And we're kind of basing around there. So we're just consolidating around the $65 price point. We've gotten a little bit of a pop off that. And we're trading 67. So I really don't have my bigger bias, if I was going to lean anywhere, would be to the upside,
Mhm.
to potentially back to like 69.70 potentially. That area, which would now be, if you're looking from a Dakota perspective, it would be that resistance, prior support. Um, if we fail though, if we break down below 63,
Mhm.
I really don't have a whole lot
We're in
of
trouble.
demand.
Yeah.
Yeah, I really don't have a whole lot of
Yeah.
demand until back down between 57 and 55. And then
Mhm.
you talk about, some pretty low hanging fruit where you got a pretty obvious pivot low down here at 58.20. So anybody swinging any oil trades, if they're deep in the money from 50s, they might be keeping their risk back near kind of those mid to high 50s. So we'll see. But at the moment, yeah, if this 62 to $65 price point continues to hold, I like a little bit of a further continuation higher to $69 to maybe $70 a barrel. If we break above that, I'd be looking for a retest to maybe 74 and then potentially back up the highs. But we're obviously don't really have any true kind of direction right now. The short term, if you go look at like an intermediate time frame, like a 1 hour, we're obviously breaking out of kind of that ugly range
Mhm.
that we were in. So if you go look back at the 24th all the way until the second, you've just got this nasty range. We were bouncing between 66 and 64, essentially. Your Dolby, that is prime conditions. Just sell the extreme highs, buy the extreme lows, and you're just looking for 1 to 1, 2 to 1, potentially at the most. But recently we've broken out of that, but we're just struggling. Like we took out this prior high, which was 60 kind of 720 ish. We took out that prior little swing high that drove us back into that higher time frame demand. And we've failed to
Mhm.
really maintain above that. Obviously, the recent kind of segment that I'd be looking at for a potential trend would be a pivot low of 65.20s to the current high of 69.50. Anything in the middle or below the middle, I'd be looking at possible entry. I would not want to participate in this. This is nonsense. Like this is a really great way to get chopped up. So I would
Mhm.
look for maybe a pushback below 66.50. See if there's any potential imbalances. Like you've got some support potentially around 66.30s, which would be a retest of the prior high before that breakout. Would also correlate kind of right with that 50% mark. get a little bit of a pullback, and then maybe break the top of the range and push back up to some kind of more intermediate time frame supply. But that's kind of my outlook on oil. It finally broke out of the garbage. You have a little bit of momentum that carried through from the second into the third, but then we've just died off. And I don't think there's really a point in trying to box in or participate in that information there. I think that's pretty ugly. How about you, Hoop?
So,
what are you thinking on oil?
You and I have had conversations. You've tried to incorporate maybe volume. It's kind of one of those little nuggets that you might add. This is to me, without getting, Jay slices and dices volume up as good as anybody I've watched. But if you want to keep it simple, I just have those volume bars on the bottom, and then I basically, on my dailies, I have VWAP attached to the year. Because if you watched any of, there's a couple of great videos out there with Brian Shannon, actually ones with Anne Marie on it. VWAP has these, it's a volume weighted average. So when I look at it, especially on a daily, it's rode this VWAP a good chunk. Now, this is after this break, we busted through it, and now we've kind of consolidated. Now we're back above it. So you're right. I mean, it's still the hardest freaking long around right now. Every time it looks like it's going to move higher, OPEC's increasing production. There's a build in stocks. The president comes out and says we're going to load up the strategic, supply. It has a lot of fundamental things against it. So this move up in here was from basically, and I'll call it a skirmish in the Middle East. And when those things die down, this, crude is notorious for finding balance really quickly. Now, this one was about the quickest one. I've been trading crude for 30 plus years, and this might be the fastest I've seen this market find rebalance. So, it's driving season, Gabe. I mean, fundamentally, there's some things, but I will tell you, it is still one of the harder longs around. So more often than not, on big thrusts up, I think the better play is to find the short. It's just the risk reward tends to be paid. You're paid off a little bit better. But right now, there's some things on a swing. It's summer. Could we rotate back up to $70? Yeah, that wouldn't surprise me. But as soon as something gets done, I could see us, if we start, like you said, losing structure through 63, we're going to head back to 58 pretty quick. And I just don't think that happens probably later till if I'll share some seasonality stuff next week, but you will start to see in August, some of that rotation start to come out as we get into Labor Day, and the crude market does tend to weaken up pretty quick going into the winter. So,
absolutely.
But that's kind of me now. I like buying a dip, but ultimately, I think the better you seem to get rewarded better for selling because every time something comes out, the house account was long twice and got on the wrong end of it. So, so I like the short side. It's just got to be patient on it.
Hear that. Well, we have a visitor. We
got there.
Let's see, you guys.
What's up, Dakota?
Can you hear me?
Yeah. What's going on,
there
man?
He is.
Gabe, we're gonna talk about these markets.
Yeah.
I try and do my best Peter Tuchman impression.
You gotta. I mean, you
gotta
came
run
in with
around
some,
your phone, man.
Yeah, you gotta come in with some more energy.
I'm exhausted.
Thanks for dropping by.
It's been crazy. Thank you, Hoop and Gabe. I appreciate everything you guys have done to be able to do this tonight.
Absolutely. We're happy to do it. Got to give you a day off here and there,
Yeah. Day off. I work on my days off too. But stop by. Figure I can stop by and give a shout out to you two. Thanks for bringing me in, Gabe.
Absolutely, man. Enjoy your holiday weekend.
Got it, man. Yeah, have a good 4th, buddy.
Yeah, you too, guys. You too, both of you. YouTube. Hi, chat. I can't see the YouTube chat. It's weird. It's weird. I can't do a Peter Tuchman where he's all crazy and walk in and I need to screw up with my internet connection. My internet connection needs to get worse.
You're looking gangster.
That's what chat
you're looking
says.
gangster with the shades on.
Yeah.
All right. I'm headed out.
All right, brother. Have a good one. We'll see you.
All right, bud.
Thank you.
We'll see you, man.
See ya. Bye.
Take care. That was cool.
Gotta love Dakota. Gotta love Dakota. All right, so we're back to the charts. Love some markets. You can't get away. You can't get nope. Can't take the markets away from Dakota.
What do you want to move on to next?
Let's go take a look at gold. Let's go take a look at gold. All right, so let me start out with the daily time frame. Now, gold has been out of the precious metals, I'll say gold has been the most lackluster, in my opinion. I don't know about you, Hoop, but I am not really a fan of kind of how gold's been trading. It's kind of all over the place. And if you look at the daily time frame, we just have a lot of conflicting information. So if you're looking at a lot of kind of recent pivot highs or swing lows, depending on what you're, how far back you're really looking, we had a nice little channel we kind of got into back at the end of May to, let's say, the middle of June. And then we broke out of that. And then we ended up just kind of coming down until like the 3250s. And now we're kind of bouncing off. We found some buyers after we took out the 3267 low from the 29th of May. So got a nice little kind of trap beneath 3260s. And then we popped and we're kind of just sitting around between these 3340s and 3370s the past few days. In terms of kind of, I'd say, key levels, what I'm looking at, gold is a little unique. So gold has some supply at its all-time highs, and that's really where we've been struggling. So if you look at, the first location of where sellers really came into the market back at the kind of the third week of April, we have the 3537, which is essentially the all-time highs, to 3416, just that nice little rally-based drop. And then since then, every time we've came back and revisited those 3400s, whether it's the 6th of May, we came back and tried again on the 4th and 5th of June, and then middle of June, we just continue to struggle to maintain above any kind of 3470s, I'd say, is usually kind of the point at which we really fail. For demand, we had a little bit of demand form around the 3270s. So it wasn't any sort of major reaction. Like if you look at the prior kind of push down here, right? So the swing from 3470 down to about 3151 back in May, we had some consolidation at those lows, and then we ended up breaking above. But we really didn't carry through with any strength or any continuation. Like we just kind of fought for the next couple of days after that. So there's a little bit of buying that came in around those 3270s, and which is why you see there's a little bit of a retest on the 29th of May. We tried, sellers attempted to take us back down, tapped into those 3270s, bounced again, held the lower extreme of that range. And then now the 27th of June, we did the same thing. We came down, tapped right below, kind of right into those 3270s, and then we popped again. So knowing we continue, the first touch of that area of demand, we got a pretty quick reaction. We didn't go very far into that area of consolidation. This next low that we created on the 30th and 29th, we went a little bit deeper. If we do end up seeing another push down, I would anticipate an even deeper push into that area of demand, potentially if there's enough selling to take us lower and to create a new kind of pivot low. The point at which, what I'm really eyeing is a takeout of that 3150 level. And then I really want to see how we react to 3069 to 3000. Like that's a pretty pivotal area for me. And the reason was mainly because of the aggressiveness, like that V-shaped recovery, the aggressiveness that buyers came in with after we sold off like that. This was obviously a tariff. And then, the 9th, 10th, and 11th, we rallied and broke to some new highs. So that's where the kind of, if we fail at these 3200s, that's really my next stop. for kind of big buying potentially. And it would take out the lower extreme of the current range, and then we'll kind of see where we go from there. But if we end up finding buyers, my next target would essentially be those 3480s, which would take out those two prior kind of relatively equal highs. And then we'll see kind of where we go from there. That's the higher time frames. On the shorter term, though, like you really just don't have a lot to work with. If you look at the 1 hour, especially the last few days of July, we had a nice run from the 30th into the 1st. Really just, that's the pure definition of a zombie rally. We 3280s all the way up to about 3370s. That was a pretty nasty rally. If you were long, great. But if you're trying to short it at all, you were just continuing to get ran over and over again. But really what I see here is that we failed to maintain above these highs, which were the 3370s. So we had a couple opportunities. Buyers tried to step in. Every time we pierced above, sellers came back in, and now we've created a lower low. So for structure at the moment, I'd be leaning a little bit to the downside. And that's mainly just because of the recent leg that we had lower. That created, we had a failed breakout, so we have a lower high technically. And then we have a lower low, which would, for me, would give me that kind of 1, 2, 3. Primary focus would be that breakout segment. So I would really be leaning a little bit more to the short side. And one area that I really love would be a retest of the 3355s to 3363. That area right before that huge breakdown. Now this breakdown, to my knowledge, it's a 7:30 a.m. candle central, which means that was probably news today, right? That was NFP. So yeah, because that was today, the 3rd, right? So NFP 7:30 this morning. Of course, equities rallied, gold fell off a cliff. So if we can come back into that kind of consolidative area, would also kind of retest some prior support, which is now turned resistance, and that would be above the midpoint line of that recent segment. But that is a pretty hefty amount of risk. $7 an ounce on a mini might be too much to handle for me. So I might have to dive into a micro just to be able to position size a little bit more responsibly. But that's kind of what I'm looking at.
Micros there. Yeah. It's so one thing I would tell you that gives you, and I know, with Topstep X only being a year old, there's just, excuse me, there's one thing that would probably gives you a little more clarity to me on gold, because it's a very directional market, and I use range bars, and there's so many, and traders are going to find there's a lot of goodies coming this month. And I'm one of those guys that definitely is clamoring for that one. So I think sometimes in a candlestick world, it looks, and finding structure to me it does look a little goofy, and it gets very directional. And, it also is a very momentum market. It does not like to move rangy. It likes to be moving in one direction or the other. So like you said, we hit 1, 2, 3 up there at that 3480, and we rolled over pretty quick. I think I'm in agreement with you. The tail end of that, call it that 3250 where we came down. If we start to lose structure, and there's that yearly VWAP sitting there again, way down there at 3160, 65-ish area. Yeah, I have really, and I'm like Hoag, have been very, I like this market. And I think it's a style that I have a little bit maybe from the floor. And that's where if I find, and I do find a little bit more of a structure along a bottom or top, the market just goes. So right. I've shared a Discord a lot that if you catch a move directionally in gold or like platinum or copper, I think the one thing I've learned over the year is that I am not so apt to take, like you were saying, $2, $3, $4, $5, because when it goes, it moves 15 to 20. and it just goes. And like you see on a 30-minute, I'm amazed sometimes how you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I mean, that was 12 straight freaking bars.
6 hours, yeah.
It's just, I mean, and when you're a scalper, you're like, oh, we're topping here. No, we're not. No, we're not. I mean, so
Yeah.
when it goes direct, and it just did the same thing on the way down. So, and I once again, I just think it feels like it's losing a little bit of its momentum. I mean, a lot of the crap of we got pounded with uncertainty, and a lot of these uncertain things are become certain. So fundamentally, it feels like we're going to rotate. But all I know is when it gets directional one way or the other, don't go top picking or bottom. Just find structure to where it goes, because it's just going to keep going. So
right.
that is one thing on that market for sure.
Yeah. Well, do you wanna go look at natural gas? We got a chart request.
Who said that? I saw that in there. Yeah.
Let's go take a look
Have you
at
ever
natural
traded
gas.
that one yet? I don't think you have. Gabe,
I haven't. I've paper traded it, but I have not traded
Okay.
it in any form of a prop account
Do you know what its name
or
is?
live account.
Its nickname is
The Widowmaker. I heard that from you.
Damn straight.
Yeah, I heard that from you. Yeah, that stuck. That stuck in my head for sure.
Scariest trade of my life in
Really?
30 years of trading was in natural gas. Period. There's no trade I can honestly say that I didn't pucker up more to than natural gas.
Yeah.
Short natural gas. You lived in Minnesota. Short
yeah.
natural gas when it's minus 10 out. And what's much different. Limits were tighter back then. It's very much a seasonal market. There's a lot of seasonality to it. We're going to start your move. You live in Tampa. You know that hurricane season starts rolling in. Energies do get affected by it. But in the winter is typically, and we had a huge move up over the winter. And it is a very, once again, it does have a little bit of metal in it where it gets super directional. I mean, we were all the way up. What's that? 55.78 was the high in the spring. It comes down pretty quick once it starts to warm up. So that's a fundamental thing you see right there. I don't, we do, slightly talk about the EI natural gas number. It used to be natural gas and crude used to be probably some of the more traded markets at Topstep when I first started.
Right.
Natural gas might have been 6 or 7 down the list, but crude was like in the 2 spot. Nobody even talked about NQ. But for right now, you can kind of see, we had a pretty good base built in off of where I have that trend line is. It's just, as the temperatures and summer starts to go through a little bit, we kind of rolled over at that, 42.50 area. And now we've got some support in here at that 3,400 level. Once again, from a seasonality perspective, we're sitting here beginning of July. We probably still got some time before, really August, September, when hurricane season starts to kick in. Seasonally, it's still probably a sell the rally type market. But
yeah, I'm with you there.
It's definitely one, and that's on a longer time frame. If you look at on the 30-minute, by the way, in combines, please traders, just trade the micro contract. You don't need the full size, because when it moves, it'll blow 50, 100 Ks up faster than it'll make your head spin. So I definitely recommend trading micros in that one. But it has, you can see in a 30-minute here, we got up to that 3,500 level and we just kind of rolled over. We're basing a little bit in here. Its ladder or the dome is interesting. There's a lot of NQ traders when there's pockets. See, let's pull up micro natural gas. I think I would have it on my favorites.
Shout out to Coach Jay in the chat. Said, look at these guys.
Look at these guys.
Look at these guys.
He's always carving the markets up. Why can't I find it?
What are you looking for?
Oh, I thought it. Oh, there it is. So there's a micro natural gas ladder, and like if you threw up, ES next to it, you can see that there's gaps and spaces in there. So that lovely word we talk about, slippage, you will get some slippage in that market. So just anticipate that. But that's kind of how I feel. I think we're basing a little bit in here, but seasonally, I'll bring some seasonal stuff next week when we're back in there and share a little bit of kind of what goes on there in the seasonality next week.
Sounds good.
Yeah.
Awesome. All right. Well, then let's go take a look at my charts real quick. I got a little bit on natural gas. I have charted this once before. And once again, this is just, I think Hoop brings up a lot of good points. Now, I'm not really familiar with the seasonality of this market, so I'm a little bit more reliant on the technicals. Kind of one area of price for demand that I'm looking at would be from back in December of last year. So you look at the 30, like 323 to 286, that 13th of December through the 20th, that little hesitation where you had that back and forth and then a nice breakout to a new high, just relative to the prior swing highs to its left. That's kind of the next area of higher time frame demand that I could see some potential buying stepping in. Now, granted, that could be thrown out the window if, fundamentally we're just not in a location, a price where that makes sense. But technically speaking, just based off what I'm looking for, that would be the next kind of area that we could potentially see some buying. And I do agree with Hoop that right now, the market since at least middle of June has been a little bit more of a better sell. We've got gotten some structure. The downside, we had 1, 2, 3, 4, 5 days in a row, 4 or 5 down days, and then we had a little bit of a pop. So Hoop's talking about sell the rallies. Any little pop that we've had, that's so far, at least in the recent week, that's been a good opportunity to get short.
100%.
And then in terms of supply, we continue to struggle. There was an area of kind of consolidation back in April, like the 9th through the 11th, essentially, and that was from 446 to 410. So that little hesitation, kind of that motion where we have a nice few days down, we have that back and forth, that kind of hesitation or uncertainty, and then that continuation momentum further down. That has been an area that we've struggled with. Excuse me. May 12th, we came up. We spent some time actually at the beginning of May all the way until mid-May. We spent some time kind of chopping around in the 410s, 420s, and then shout out to Eddie. And then we've came down. We had some 5, 6 down days in a row, failed to break lower. So you see kind of we have this little area of support that we developed on the 360s to 50s, came back up, retested those 410s to 420s again, and then now we've broken beneath support. And we're kind of holding that line. Those 350s, we tried today. So if we go down to like a more of an intermediate time frame, we really attempted. And then obviously we had NFP. I don't know how much NFP and kind of red folder economic data impacts natural gas per se, just because I'm not experienced in that regard. But technically speaking, we kind of had a break of a little channel that we were seeing on an hourly basis. So we had this little kind of short-term channel uptrend taking place. NFP took us below it. We closed below, and then we just kind of rode the wave lower. And now we're kind of basing or consolidating around the 340s. And we are tapping right into a smaller time frame area of demand. It's kind of 341 to 3, kind of just wrap up that whole area. 336 to 341. So if this is potentially like a little bit of a bear trap, this would be a location to potentially have a really easy invalidation point to manage risk. There's a break of 336 would be essentially another break of a recent swing low, and we kind of confirm that downtrend structure, and then we could maybe head back down to that daily demand at 323. So I really do like the short side, but if this 340 to 336 becomes an area of buying, like it had been before, and we start to see maybe a closure back into the 50s, we see a higher low form, and then we see a move to break back above support into the 60s, then I'd be looking at a return to 375, and then maybe go back and retest the 390s. So ultimately, if you look at the general move in the direction the last week and a half, 2 weeks, it's definitely down. So every little correction, every little rally, and by little, this doesn't look little, obviously, but any rally that we've had has been a good opportunity to sell. It's just been a little hard to, identify a location, particularly the move that happened from the 26th to the 29th. That was a pretty hard rally to try to call a top, because it broke through a lot of that. But anyway, so that's kind of what I'm seeing in natural gas. I definitely like your vision to the downside. I don't think there's any reason to call the bottom here, since there is such a really key level in just my perspective at the 320s, and structure continues to tell us that sellers are more dominant right now in this market. But if buyers once again do take over, we see some higher lows and higher highs form, we break back above support into the 360s, then 375, 390s. That would be my next move.
So the other fundamental thing that, most of Europe relies on natural gas as a source of energy. So when the Ukraine-Russia scenario was heating up, Russia is one of the biggest suppliers of natural gas. So if that spigot gets turned off or, turned down, that is one of the reasons we saw a massive move in natural gas about a year and a half. Yeah, about a year ago. If that would ever get turned up again, once again, that rhetoric probably would be talked about again. But right now, the energies and natural gas until, one of the reasons the pop came there is because there was an early hurricane rolling through Mexico a couple weeks back, and that got a pop. That's where a lot of that pop came from off your chart. So the weather, when you talk about markets like ags and natural gas, I would always tell you, if you see some of those things being newsed about, you got to take heed in them a little bit, because you could say, well, technically, what's going on here? Well, there's a freaking hurricane rolling through Mexico, and it's going to disrupt supplies. So that's how I look at fundamentals. They're in the back of my mind. They used to be a much bigger deal, Gabe. You just got to keep in your back of your mind, with that bias, I guess, is how I look at them now. So,
yeah. Well, thanks, Hoop. I see you pulled up the cattle chart. You want to take us over to cattle for a few minutes?
Yep.
We had a request in there. Let's take a look at cattle, and while you're talking cattle, I'm gonna scope out, maybe see if there's any potential scalps in the NASDAQ at the moment.
Perfect. All right. So anybody who's been in my Discord or has heard me talk with other coaches, this was, when I was on the floor, this is one of my favorite markets to trade. A lot of size in the pit, a lot of liquidity. We don't talk about it much, and I've introduced some traders to spread trading, and down the road, I hope to be talk about spreads a little bit as things come along. They're just not something we use right now. But this market has been affected by a major supply issue, and it does not get fixed overnight. So this is going back to the spring in March, and cattle was trading at 179.85. You guys That's at a 30-minute, but I just think it shows the picture a little bit better. It has just taken off because the actual supply that makes into cattle, and you've ever heard the word feeder cattle, and it is a market. We don't trade it here at Topstep, but it is actually, if you look at it, the symbol's GF. It has a factor on it. It is the supply of, if you want to come to my Discord one day and listen to me, it's not the most riveting stuff talking about, how basically a smaller cow becomes a bigger one, but that's basically when a feeder goes to live cattle. When there's that supply issue, this is what's happened to this market. And it has rode the 50. I mean, it rode it for a good trend all the way up to 200. It is the other thing you have is that there's some seasonality that's involved there between different months. So I'm not going to we're talking here technicals tonight, but there's a lot of fundamentals that happen between when one month rotates off and another one comes on. So June tends to be like the peak time for demand in cattle, and August tends to be a time where it dissipates. So typically there's usually, we call a discount, a lower price in the August over the June contract. So this year, because the supplies have been so tight, the pullbacks have had some decent ones, but the rally's back. I'm going to go to a daily because I think it's easier to see. Once we crossed here in April, the market went pretty much vertical. We took out all-time highs, and you guys heard me. I kept clamoring in the room, hey, air horn cattle. We broke through 200. We took out 205, 210. We did get one decent pullback here recently again, back to like 208. And you can see there was some price action back here on the daily, and we've bounced off that. One thing I will tell you if you trade ags is the moving averages. I know some of us don't use them, but the market does respect them. That 50-day and the 200, and I had shared this in class. I mean, look how many times this market over the past year took to 200, took off, took to 200, took off. Didn't quite get to this last one and took off. So it respects those levels. These are literally all-time highs that we've come off of. At that 220 was kind of actually had a measured move up there off of these, basically these rallies in through here. This market should be pulling back this time of year. As anybody's gone to the store and bought a frickin' ribeye, and Coach Robert, he's talk about a guy who's price sensitive to ribeyes. There's still $16 to go buy a damn ribeye in the store. So,
yeah, dude, I just paid like $35 for a chuck roast. What the hell's that?
I mean, it's as fundamental as it gets. It's a supply demand thing. There's not a lot of supply, and people keep buying meat. Pork is a cheaper option, so is chicken. But if people want to get on their stuff on the smoker this weekend, they're buying. They're gonna buy their steaks and their ground beef, and the demand is right there right now. So it's a buy the dip market. The biggest thing, and the one thing that hangs out there, like I'll tell you, I said this to Hoag last week, and I still talk to fundamental guys in the market every day, and a lot of them have been caught on the short side looking for a pullback, but they have a lot more deeper pockets than you and I, Gabe, so they can handle some heat.
That's for sure.
So this break in here has helped. But there's a lot of longs in this market. I would say if it does start to roll over and you start to see some liquidation, you could start to see this thing pull back to 200 pretty quick. So,
Okay.
but yeah, there's a lot of fundamental stuff going on in that market. But I mean, Gabe, for a guy who doesn't know all those things, well, all you can do is lean on the structure, right? So let me tell
Yeah,
you, you look at
exactly.
that right now, you break that down from a technical, and I just gave you some fundamentals, but you tell me
Okay.
what you
Yeah.
see.
Let's do it. Pull up my charts here real quick. All right. So from a technical perspective, there's really kind of one area of demand that stands out to me, and that's going to be the 205s to 202s on the daily time
Mm-hmm.
frame. It's
Yep.
kind of really where some buyers started coming in mid-May, or where demand picked up in mid-May, however you want to really word it. We are kind of dealing with or sifting through this little area of hesitation between 211 and 207. That's really where demand is currently holding. So I really don't anticipate seeing the 205s or 202s or even below 200 unless
Mm-hmm.
we're able to see some selling through these 207s, because this has really been a
Mm-hmm.
problem for sellers. Let's
Mm-hmm.
say from a technical side of things, really you just for supply, you really just have the highs. Like there's really
Yep.
nothing else. You had some selling come
Mm-hmm.
in, 214s, 215s, obviously a little bit of a base drop there, but there was no real follow through. So if I had one lean to one side, it would be to the buy side. It would be to
Yeah.
demand increasing and maybe returning
Mm-hmm.
to 220s or higher.
Yep.
Or at
Mm-hmm.
least coming back up to 216s, 217s to figure
Yeah.
out kind of what we do with that area. So really daily, higher time frame, that's kind of what I'm working with. Structure on the 1 hour time frame, what I like is if we're kind of looking at confirmation of the demand kind of picking up, you see we had a pretty well defined trend,
Yep.
channel that got broken, broke out of
Mm-hmm.
that. We took out a recent high above kind of 213.80s, came back, retested that daily demand, and also a little bit more of a fine-tuned area of lower time frame. So you have a little bit more of a kind of a reduced location or reduced risk location to get long
Right.
in that higher time frame. Because 211s to 207s hoop, I don't know what that represents on a contract, but that's probably ridiculous in terms of risk.
Yes.
Looks
So
like
it's every dollar is $400.
yeah,
So this is the
that's
other
true.
problem a little bit for if you're in a 50K or 100K. There's not a lot of scalability to it. You're in one contract, and you're
Right.
not going to say it's not as liquid as many. It's not liquid like an ES or something like that. So it does get a little, it does get a little twitchy. Especially can rip. If anybody tries to trade it, please watch the opens. The opens are a little bit violent. It'll trade both sides of 100 points. And like I said, if you talk about $400, for a buck move and it moves $3, that gets pretty expensive on a one lot. So
Yeah, I
that's
can
why I
imagine.
don't think it gets. We need micro cows, Gabe, is what I've
Oh,
decided.
dude, if we had micro cows, I would definitely look at
Mhm.
trading it.
Yep.
But yeah, I'm leaning to the buy side, right? You got a higher
Yep.
low,
Agreed. Hmm.
correlating with a higher time frame area of demand of buying. We had a
Hmm.
previous high get taken. It didn't last long, but now we're pushing around those 214s again. And so if I was going to lean
Yep.
one way or the other, it would be targeting. I like the kind of low hanging fruit target of 216. Take out that prior swing high, tap back into daily supply around 216.75. You got like a little sweet spot if you wanted to attempt to try a short. That would obviously be counter trend at that point, but that would be the location to do so. 216.70s to 217.87. That would be like a smaller kind of location of where that breakout really that kind of selling came in. Uh, so that's kind of my anticipation is I would like to get a better location. Like I really don't want to buy here and now.
Yeah.
I would love to see.
Yeah.
I
You
don't know
definitely
if
want to
we'll
wait
get
for
it.
location on that market. Yeah.
Yeah, I don't know if we'll get it, but maybe a push back down to like 211.60s and then a move higher. That would be pretty appropriate. It would also kind of be, I know I'm kind of getting artistic here, but you've got, the previous segment, right? So the previous low of 208.90 to the current high of 214.50s, the midline of that segment, so equilibrium would be around that 211.82, which would kind of correlate with some prior support resistance level too. So that's kind of what I would look at. If I was going to trade cows, this is I would wait for a pullback. We could get a little bit of a sweep of that high first. So take out this little prior high, 214.60s, trap some buyers, look short for just a little temporary bit of time, come back down to the 211s, and then go see if we can book it up to the 216s and tap back into daily supply. So that's what I'd be looking at. I did get triggered in a long on NQ, by the way.
Where at? What's your price?
I got in at 34, 23, 34. And what I'm really looking at is,
go
ahead.
No, give me, you're just going to tell me, so I'm going to let you do it. You're going to tell me what you're looking at, what you're risking.
Yeah. So the read is essentially we broke the trend, the little grind down from the reopen. And then at this moment, we are seeing some buying momentum come in. So we have a nice little pivot. What I like is the fact that we took out a pretty major and obvious wick. So we took out a low with 711. We saw some buying, came back down. We attempted again to close below the 20s. We failed, held the 20s. Now we see some structure broken to the upside. So we have, some highs getting taken out recently. And I like that I'm buying on the pullback, right? So let me clean up some of this because I know this is probably a lot to look at. And then let me get rid of this, put a stop down. And same kind of concept. So previous low to previous high, but just on a smaller scale. So 1 minute, I'm right at balance, right at the 50% kind of midline of that prior segment, which means the markets had an opportunity to pull back. And now I'm looking for continuation off of this little area of basing with this breakout that caused these highs to get taken. The more aggressive area of demand, 23,042 to 23,038, that got taken, which is once again why I prefer to typically not try to, go get entries, in this case, in the upper end of that kind of upper half of that prior segment, because it's just more aggressive. They're more likely to get stopped if the market does pull back a little bit. The real question, though, is, was this just a trap? And then we're just going to grind lower for the remainder of the overnight? Like, like we've been doing from the afternoon? Are we just going to see this grind lower and this was just a trap? Possibly. But willing to take a stab at it. I'm going to include, so my entry is the 34s. Currently, I'm risking 300 on two contracts, 2 NQ. And my stop would be 26.75. So what I'm considering.
You ever use fibs, Gabe, at all for retracements or anything like that, or no?
I had in the past. Yeah, I had in the past. So if you apply like a default fib to this,
right?
Other way. You apply a default fib to this, the 61% is right around the 31 level. That midline, right? So aggressive trends typically like to pull back to 38. If it's a strong trend, 38 should hold. Medium kind of midline equilibrium, I like as well, but 61%, if it's a little bit deeper, that's okay. And that would kind of also give me a little bit of breathing room for a little 1 minute breakout after this consolidation from the 30s to 27. So if both of these fail, we're going to new lows for this for the overnight session. Yeah, exactly. So if both of those fail, then that's why I'm willing to include both of those 2 contracts. It's not a lot of risk. And at that point, if we break below, then I'd look for possible shorts to grind further down into the overnight. But we'll see what comes of it. We got a little bit of a wiggle off of the 36 to 32s, but this would obviously be a scalp. In terms of targets, what I'd really be looking at would be just kind of coming back up to retest, break above the high that we created around 50, and then tap back into these kind of 51s to 55s. if we were to get back
Will
up
you
there. And
true
then
slow market it and leave it in and like Dakota get a good
yeah,
night's sleep? And would you
yeah,
do that?
I'm gonna leave this. Yeah, I'm gonna leave this running. We'll see what happens here. I
Yeah.
know we're probably gonna close up here in about 10 minutes or so because I know we've been going a little over an hour now, and I know that
Yeah.
you probably want to get into your evening. It's getting into.
No,
I think
it's
what
just I'm
dinner time
curious
for you.
to see. Yeah, no, yeah, here a little bit. Yeah, it's 6:50. I'm just curious, um, traders like who always have to be watching and in their trades. If my thing is, and it's kind of cool to see like you, Dakota, Jay, take a stance of I understand the risk. I know what the risk is. I don't need to be watching it 24/7, and I've got my stops in and I let the trade play out. And I think
Right.
as a VIP coach, that's the biggest thing. I said some people are always, I joked the other day, like some people always see me. I have my arms folded. And the reason I have my arms folded is because if I have that damn mouse in my hand, I'll go start taking it and I'll start looking around 6 different screens and go find something.
Right.
So making that commitment to the trade and saying, hey, I'm good. If I get stopped out, I get up in the morning and, I go look at something different. And tonight you might still have it on.
Yeah.
That's the other thing too,
Possible. It's
Yeah.
definitely possible. Now, granted, we're kind of grinding a little lower, but I have one more zone of interest, and if that fails, then obviously maybe look to the short side. But yeah, I'm going to leave this going. Targets will. It's just about 2 to 1 essentially. So risking, 8 to make. Well, actually, so I'm risking 34s to 26s. Yeah, so just about 8 points, and target would be the 50 level. So risking 300 to make 6. But honestly, this looks like it might get stopped here. Yeah, this is probably about to get stopped here. We might take these. We might just get a nice little flush lower here, which is totally okay. I gotta pop the slow markets cherry for trades. So
Yeah.
forgive me for
So
being
chat,
crude.
get in there and lean all over them. Tell them what are you doing? Like they do Dakota.
Yeah.
I get in there sometimes, and when the true trollers are out, I'm like, man, he doesn't have to be on here. We all don't have to be on here, but we enjoy sharing, trades and what we do.
Yeah, absolutely.
And the trollers are going to be trolling.
Yeah, it's a fun time. But hey, man, it's 4th of July. We got a holiday weekend. What are your plans going into this weekend? You golfing at all? What are you doing?
Yeah, I'm gonna go out probably Saturday. I have two dogs and one that's very sensitive to fireworks, so
Yeah.
we won't be shooting any fireworks off around my house. So she'll need her meds to keep her in
Stay
check.
calm.
So yeah. We just got our first rain, so we got a little steamy here. So it's bad enough we're the oven. Now we have some humidity. So, but yeah, I'll
Right.
get out on the golf course on Saturday.
Cool. Awesome.
How about you?
Sweet. Yeah, I'm gonna head up to Orlando tomorrow. I'm gonna go see a movie with my dad and my sister. My mom is actually out of town.
Nice.
She's going on a cruise with a friend of hers, longtime friend. So she's going to be in Alaska, I believe, is where her cruise is. So my dad, my sister, and I. Yeah, that's actually kind of crazy. I think Ho's wife is literally going on an Alaskan cruise. They might be on the same one. I wonder if it's
They
the
might
same
be.
one.
Yeah.
That'd be
Might
wild,
want to
dude.
run into that. Yeah.
I'm gonna check with my mom and see what cruise they're on, and I'll tap in with Hoag. That'd be kind of wild. But no, yeah. So a movie tomorrow. My dad, and my sister. We're gonna go see that new Jurassic World movie because I don't know.
Oh, cool.
It's on the Epic or the IMAX screen, so why not? It's probably gonna repeat
AI
of the same story
on that, by the way. Yeah,
Oh,
but I heard
that
the AI is off the chart.
agreed. I saw
Yep.
it's been doing fairly well for just releasing, and obviously you kind of expect a similar storyline of like, hey, we shouldn't be going to
get
this
loose.
island, but
You get
we're going to
caught.
go to this island.
Yeah.
And, get caught up in some shit. So it should be a good movie just for the fact that my dad and I love just really good cinematic experiences. Now, Jurassic World is probably not going to come close to some of the really great cinema out there. But big screen, recliner chair, nice, bass subwoofer shaking your chair and scare the crap out of you for a couple scenes.
Exactly.
Yeah, but that's it. And then other than that, Saturday I'll probably come hang out down back in Tampa. I got a buddy in town, a previous roommate of mine. He's down in Tampa for the weekend with his family, and he got us a double date. So Tyler, shout out to Tyler. He got a double date for us. So I'm gonna go. Hopefully, not fall on a grenade for Tyler, and we'll see how that goes. No, she seemed like a sweet girl. Hopefully, they have fun personalities. It'll be a good time. Might go hit the beach or play some pool. We'll figure it out. But yeah, a little date night action on Saturday, and then Sunday I'll go volunteer at church. I actually work for the production on my church, so I do like camera producer behind the scenes stuff. So I'll go do that on Sunday morning, and then just have a day to myself. So that's my weekend.
Cool beans.
All right, we're about to get stopped out. Let's see. Will we?
Hanging. Toast.
It's hanging.
Get the toast
about,
bro.
Get the toast.
Toast
JD,
toast.
we're toast.
JD, where are you? We're toast.
Where is he?
That's still one of my favorites.
I can't even find it. I can't even find it.
You got it?
There it is. Are we toast?
There it is.
We might be toast, boys.
Love it.
Yeah. All right, man. Well, Hoop, it's been a great time, man. Thank you so much for jumping on. Yeah, I really enjoyed hanging out with you for a bit. Everybody in chat, for the 500 people that hung out with us tonight on Dakota's off night, thank you guys so much for spending the time with us. And there's the stop out. So here, I'm gonna just practice some good habits here, and I'm gonna do what I know I should do, and that's gonna be lock myself out. So I'm gonna go ahead and hit that little stop sign because I don't want to be tempted. I took a $300 loss. Overnight's probably gonna be slow. I might do the morning, so I'm gonna go ahead and lock out. We'll do custom, and we'll go until 7 a.m.
Like that.
Go until 7 a.m. So about 9 hours. Lock myself out for overnight. Give myself the little manual lockout just to make it official.
Goes, he didn't know the market was actually moving right now.
Yeah. Oh, well. You guys have a great weekend. For all that joined us. Hoop, thank you again, brother. And we will see you guys Sunday. So stick around Sunday for the reopen, 4:45 p.m. Central. You will have Anne Marie and Coach Jay for market kickoff. So come back and hang out for the reopen this Sunday. We obviously are off tomorrow. There will be no day show tomorrow. And just remember, futures markets are open until 12 p.m. Central Standard Time. Just make sure you're flat by 11:45 if you're in Trading Combine or an XFA. If you're in a live funded account, 11:30. Shout out to everybody. And once again,
thanks, chat.
You guys have a great evening, and we will see you next week.